What's going on, everybody? It is your boy Kaliva 24/7 as I bring a brand new video. Today, I'm going to be showing you one strategy that I use to trade this specific pair, GBPAUD, and this is the pair that I had analyzed last week, and I came out with a very good signal. So we were looking into GBPAUD, right? And this is what I saw on GBPAUD. Fine. The market has been moving towards the downside. Now it has reached some type of support, but still I was able to come up with the signal for a sell, right? So there was not that much price action. It made sense via price action wise because I drew this trend line, and it made sense to me why the market should sell from there, right? And that's one of the reasons why we took a sell. But that's not the strategy that I'm going to show you today. So without wasting more time, make sure you do like the video, subscribe to my YouTube channel if you're new, and make sure you do turn on that post notification bell so that you get notified every time I upload a new video with a different strategy. You never know, I might just release strategies for different pairs, or maybe, a breakdown of my strategies. So without wasting more time, let's jump straight into the video. Alright guys, so what I had really used for last week was, like, I just drew this trend line. I was showing you that this is one of the strategies, the price action strategy that I had used to actually determine that the market will actually sell on this previous week that we come from, and the market just did that. It gave us good profits towards downside. As you can see right there, we had a nice rejection. We have been selling from Monday, Tuesday, Wednesday, Thursday, and then Friday the market started to push to the upside. So this is a daily time frame, and when I dropped over to I think it was 4 hours. Yeah, it was 4 hours. I kind of saw this on 4 hours, right? It was this type of resistance right there. As you can see, the market keeps on touching this point and reversing, so it made sense to me why the market would sell. But like I'm saying, this is not the reason why I actually sold last week. That's the reason why I sold, but there's another strategy that gave me more confidence into taking this trade, right? So I'm going to show you that strategy in a second. So we're going to have to go back to the daily time frame. Remember, this pair is GBPAUD, and what's happening here is that I'm going to put some moving averages, and you're going to see the magic that I'm talking about. So basically, we're going to have a moving average 75, right? The period is 75 and it's yellow in color. So what gave me the signal with this pair is quite simple. If I look back, especially on this previous month, or even like I look back a bit, you'd see that every time the market touches about the yellow line, it bounces. It touches the yellow line, it bounces. It touches the yellow line, it bounces. It touches the yellow line, it bounces. Same applies even here. So it made sense to me that the market will actually sell from this point going all the way towards the downside, right? Simply because why? Like I'm saying, in history, when I keep on checking right here, you see the market keeps on touching the yellow line, and it keeps on pushing towards the direction that it's supposed to go to. So these are the type of retest entries that we are looking for. But now, how sure am I that the market is now actually retesting? You can actually see when the market is now playing above the yellow line that, okay, now the trend is on the uptrend. Even this one, the market broke below and then it came back for a retest. That was already a strategy or a confirmation on its own to say, when the market touches, as soon as the market touches the yellow line, we're going to take a sell entry, and we did just that. It sold. We took another one here. It did just that. We sold. And last week I gave a sell signal just about this point, and we're still around that zone. So it makes good sense for us to still continue to sell this market, right? And exit probably some point around here, or rather we trade with the price action strategy, as we can see that the market is on a bearish trend. So that's the strategy that I had used to determine the direction for GBPAUD. Now let's add one more moving average, which is period 21. As you can see, the white line that I've just added. So when these two cross towards, well, when the white line crosses towards the downside, when the white line crosses the yellow line towards the downside, then we are quite confident that the market is now actually on the selling side, right? So whenever the market comes back for a retest, we take a trade entry. Now if you can check, even here the market crossed towards the downside, it came back up, we took a sell. The market came back there, we took another sell. Unfortunately it did not drop that much, but you know, you don't have to be greedy. You just need to take your pips and move. But this is the fun part. This is why we call it consistency. Because now if you're consistent with this thing, and if you wanted to take the whole pips, it's fine. Like this trend, you're just going to take a small loss, or rather protect whatever you've already made. And if the market comes back, it takes you out on a break even, right? And the market starts to move to the upside, comes back for a retest. You check these two lines, they have crossed, comes back for a retest, you take a buy trade. It comes back for another retest, you take a buy trade. So this is the strategy. It's quite simple, straightforward. As long as you have these two lines crossing each other, then you have a good signal. Now if we check back here, this was not quite a good year for GBPAUD using this strategy, but it was profitable at some points, like this one. It touched the yellow line, consolidated too long, but eventually gave you profit, and then broke to the upside, came back for almost a retest on the yellow line. You could have taken a trade to the upside and made profit on that one, and it crossed towards the downside. There was no entry here. This one we could have taken a trade, but however it looks like we're going to be stopped out. I'm still going to talk to you about the stop loss, right? Because I need to show you where you should place your stop loss. Now in terms of stop loss wise, I've noticed something. There's what we call fake outs. So with fake outs on this type of strategy, actually they're not here. Let me go back in history, and you will see the fake outs I'm trying to explain to you. These are the fake outs. These are the fake outs. Looking at the strategy, it has crossed towards the upside. This was a fake to the downside, the market pushed. Fake towards the downside, the market pushed. Fake towards the downside, the market pushed. So what makes this strategy to be the best is that it's quite consistent when it bounces on the yellow line, especially when you have these two lines crossing each other, right? So what's happening here is we're going to calculate the pip value of the fake out. So from the yellow line just about there all the way to where the market faked out, and you can see the pip value is 292 pips. So that's 2,900 points. So your stop loss would be something like, make it let's make it 3,000 points, which is plus minus 300 pips. So let's make it just 350 pips. So that's 3,500 points, right? That's where your stop loss should be for you to be safe. So if you're using lot 0.01 and you have a $50 account, you would be safe. Basically, you'd be risking, your risk ratio would be high because you're risking almost 70% of your account, but you'd still be safe if you're using a $50 account. Now that's not advisable according to trading strategies and everything, because you're not supposed to risk anything more than just 2% of your account. But if you that type of a trader who likes to go aggressive with a small account, you can actually try this strategy out. For example, let's say you have $200 balance in your account, right? And you probably, let's just say you have $200 in your bank account. You deposit $50 into your trading account, and you're only risking 350 points on your $50 account. So you only have 4 accounts left. Actually, you have 4 accounts in total, and you have funded one, which is you're risking. Now you're left with 3 accounts. Should you blow on one, at least you have about 3 accounts that will bring you back to survive on the next coming trades, rather than you taking all your capital, risking it all at once, and blowing your account. So with a pip value of a stop loss at around 350 pips, with a $50 account, you can be able to survive, which is not advisable unless you have the money to risk, right? So what I'd advise is for someone who has an account slot size or a big account like $1,000, then it's advisable for someone like that to can actually risk. I think it's about 3% of their account if they're risking 350 pips. So that's 3.5% of their account. So that's actually quite advisable. You can do that if you have at least $1,000 account. So the pip value of the stop loss using a daily time frame on the strategy is actually going to cost you to place your stop loss somewhere around 350 pips. That's where your stop loss should be. And if we check the consistency of this thing, you can also see on this day right here, the market made a fake out of about 200 points, right? 213 points. So your stop loss should have been something like 350. You'd still be safe again. And then one more time, if we check this one right here, you'd see that the market actually dropped 400 points. So here we could have been stopped out. I won't lie to you. And if we even if we check the moving averages, they did cross towards the downside just a little bit, and then they moved towards the upside. But if you check the consistency of this thing, how many losses have we had? Now this is what we call a back testing. So this was profitable, and this was profitable as well. This was a failure right there. This was profitable, this was profitable, this was profitable, this was a failure for a retest. This was profitable, this was profitable, failure, and profitable. So far we're having about 1, 2, 3, 4, 5, 6, 7, 8 profits and only about 3 losses. So according to your trading journal or your trading track, you're on a good side, because now your winning ratio is more high than your losing ratio. Your wins are more than your losses, and that's actually a good sign, right? When you make money on this forex market. Even here you can see you made profit, you made profit, you made profit, and this was the day of the market change. So you gotta leave space for some losses, right? And here you can see the market made profit, some losses, profit right just about there, some losses there. So here we were going back and forth with profits and losses, profits and losses. But if we go with the risk ratio of each and every trade you take, you have to risk 1:2. At least minimum should be 1:2 or 1:3, right? Sometimes you can even make it 1:1 if you feel like doing so, but the proper risk winning ratio is 1:2 to 1:3. So this will cover your losses. If you lose one trade and you're gonna take another trade and win, then if your risk ratio is 1:2, that simply means you have recovered your losses that you have acquired from the previous trade and still made profits out of that one. So it makes more sense to me to always buy or rather sell depending on the market structure. Like right now, it's giving me a sell opportunity, and my stop loss should be somewhere. Also, if we check, the market has already made a fake out, and the fake out is just about 200 points. So our pip stop loss value should be 350, right? So we still have room towards the upside. Our stop loss is quite safe. So if we take a sell right now, plus the market is already rejected from that price, it makes more sense to me that GBPAUD still needs to sell more. Now, why the market pushed towards the upside, I can tell you it's because of this incident with the news last week of President Donald Trump testing positive for COVID-19 and stuff. The market just went crazy and did a whole lot of stuff that we were not really anticipating. However, the strategy is still valid. You can still take sell entries on GBPAUD this coming week, and from this yellow line you calculate 200 and actually 350 points and make that your stop loss, and your winning ratio should be something like 6,000 points, which is 600 pips. That's where you should actually take your profits. Now, this is more of a strategy for swing traders, for people who actually want to hold for long. So without wasting more time, I hope you did guys enjoy this video. Comment down below and let me know what you think about the strategy. Is it really helpful? Is it the type of strategy that you'd like to use? Should I drop more content of me releasing strategies? And yeah, just let me know what you think about the strategy. Also, make sure you do drop that like button and you subscribe to my YouTube channel. Also, turn on the post notification bell so that you get notified every time I upload a new video like this one. Without further ado, I hope you did enjoy. Other than that, it was your boy Khalifa, and I'm out. Peace.